Hey everybody, welcome back to another episode of Invisible Head Investing. I'm the Invisible Head Investor, and today we're going to talk about some of the headlines that I've seen from mainstream media to try to get Apes out of their AMC position and to create FUD. So let's get started. Okay, so if you guys do a Google search on AMC News, you'll see a lot of the negative headlines that pop up on the first page of Google. So this is one of them that came up. Dow Jones dives as Fed official raises this fear. AMC plunges. Did AMC really plunge? Well, let's take a look at the chart. So based on close yesterday, AMC dropped 2.42%. That doesn't sound like a plunge to me. It sounds like a healthy pullback, to be honest with you. The stock is looking really nice on the chart. It's tracking up this ascending level of support. It'll probably keep bouncing until we get to the peak of this wedge over here, where hopefully this is a bullish pattern. If the trend continues, we will see a breakout probably sometime next week, according to this. If not next week, then the following Monday. Here's one of my favorites that I saw from our old friends at the Motley Fool. And it says here that 3 meme stocks Wall Street predicts will plunge more than 20%. Well, if you read on, it says AMC ranks as the best performing meme stock of all. Shares of the movie theater operator have skyrocketed close to 2,500% year to date. Well, that tells you something, right? This has nothing to do with the fundamentals like we've said before. Now, I'm not a financial advisor. Please do your own DD. But the facts speak for themselves. This is a movement. It has nothing to do with fundamentals. And a lot of these articles that they keep putting out keep talking about the fundamentals. And they're just trying to create more FUD and trying to get paper hands out of their positions, which I'm okay with that because that just creates more opportunity for the diamond hands to buy their shares. So let's continue reading on. The consensus among analysts, though, is that the stock could lose 90% of its current value. Even though the most optimistic analysts surveyed by Refinitiv has a price target for AMC for more than 70% below the current share price. Again, if you're looking at fundamentals, that makes sense. This has nothing to do with fundamentals. So the stock is trading based on momentum. Okay, this is a momentum play to cause a short squeeze to happen so that we can get our tendies. Where's the talk of this being a momentum play? If you're an analyst for mainstream media, you should be covering what's going on and the reason that the stock is trading at 2,500% up year to date. Okay, there's a reason for it, and it has nothing to do with fundamentals. Another article I saw from the Motley Fool. Forget AMC. This growth stock could make you rich. All right, so it's trying to get people out of AMC, maybe people that don't know any better, to get into a different stock. Why would they want you to get into a different stock? Maybe they're pumping the stock so that this could be a pump and dump for Wall Street and they could screw more retail investors. Again, that's just my opinion. But let's take a look at this article here. Throughout 2021, AMC has been swept up in meme stock mania. Despite its worsening financial situation, shares have skyrocketed 2,600% this year. And while there is something charming about individual investors upending Wall Street, AMC stock is poised to disappoint. Hey, my stock is up 2,600%. I started getting in at around $11 a share. Based on what the stock price is today, I'm not disappointed. Rather than chasing meme stocks, investors should consider buying Cloudflare. Why would I want to buy Cloudflare? I'm in AMC, and most of us are in AMC for the squeeze. I'm not worried about Cloudflare and what it's going to do. Okay, so perhaps the most important thing investors should know about AMC is something that the company itself mentioned in its recent 8K filing. Quote unquote, we believe that recent volatility in our current market prices reflect dynamics unrelated to our underlying business. Yes, this is something that investors should look into. Most of the apes out there are not investors. They're in this first swing trade. They're not investing in the company long term. After the squeeze and the shorts pull out of their positions, a lot of the apes are going to pull out of their positions as well. Then the stock will stabilize to where it should be. At that point, wherever the stock stops, that's where investors need to do their DD and decide if they want to continue to hold a position in AMC at that point. The statement goes on to caution investors against buying stocks unless they are prepared to lose all or significant portions of their investment. That goes with any stock, right? That's not just AMC. That's with any stock. There's nothing guaranteed in the stock market. And based on what we've been seeing and all the DD that's been done and the information that's coming out, the stock market in my opinion and in the opinion of a lot of other people, is rigged. So yeah, retail investors have higher chances of losing their money in the stock market because it's rigged. There's no transparency. It's not a fair playing field. If you're not convinced, let's look at AMC's financial results. Last year, attendance and revenue fell 79% and 77% respectively. Despite reopening roughly one-third of its international theaters and two-thirds of its domestic theaters, its performance has actually worsened this year. Attendance and revenue plunged 89% and 84% respectively during the first quarter. Now, this is deceiving because the pandemic hit last year, especially here in the United States. Things started closing down in late March. Most of the first quarter had already taken place. So the numbers are skewed. That's why the percentages for last year are actually lower than they are this year. Why? Because things are only starting to open up now. Okay, in the past 30 days, things have been opening up slowly and they're gradually increasing in capacity. But the numbers are skewed because we're not comparing apples to apples. First quarter of last year, things were still going pretty well and we didn't have our shutdown for the most part. First quarter this year, everything was shut down. So you have to put things in perspective, and this guy isn't doing a very good job of that. Understandably, some investors are hoping that things improve as the economy reopens, but that may be too late. A competitive landscape has already shifted dramatically. During the pandemic, streaming services like HBO Max and Peacock went live, Disney Plus started taking titles directly to consumers, and Universal Studios cut the theatrical exclusivity window to 17 days. Prior to the pandemic, AMC retained exclusive rights for about 90 days. Put simply, the company is facing more competition than ever before. Everybody keeps talking about the streaming services putting movies out of business. Okay, look, yeah, that might apply to some people, but there's nothing like the movie-going experience. I don't care what your home theater looks like at home. If you're not a multimillionaire with custom home theater system, where you've spent thousands and thousands and thousands of dollars, putting in the sound system and the giant movie screen and the movie seats, you're not going to get the same experience you would as going to a movie. And people are sick of staying home. People want to go out. When the economy is fully reopened, I actually predict that we're going to see record numbers at the movie theaters, amongst other places, because people are just sick of being home. So you have to factor that in. Now, long term, in 10, 20 years, yeah, I mean, movie theaters could become a little more obsolete, but I don't see movie theaters completely going out of business. People still enjoy going to the movies. As a final thought, in a recent 10Q filing with the SEC, AMC explained that it will need to reach 85% of its pre-pandemic attendance levels by the fourth quarter of 2021 in order to comply with minimum liquidity requirements. If that doesn't happen, bankruptcy would likely be the next step, which means shareholders would suffer the total loss of their investment. Yeah, maybe that's what the hedge funds want you to think. They want you to think that, hey, bankruptcy could still be in the near future of AMC. Do I buy it? No. Like I said, I think that we're going to see record numbers in the movies this year because everybody just wants to get out of the house. People are sick of being at home, and people want to get out there. And again, I miss going to the movies. I don't know about you guys, but I really miss going to the movies, and I enjoy the movie theater experience. And I'll tell you guys, I will go see many, many movies in the upcoming months at the movie theater. Now, this is a little bit of a negative catalyst. That I found. And this is something that, probably did scare a few people, but doesn't change the momentum play at all. But I also ran across this article and it says that GameStop is joining the Russell 1000, but AMC isn't. Okay. Now, a couple weeks ago, there was news that that AMC could be graduating from the Russell 2000 to the Russell 1000, but it appears that that's not the case. So let's see why. The latest rally in meme stocks has given AMC and GameStop the biggest and third largest market capitalizations among companies in the Russell 2000 index of small companies. The Russell's index's annual reconstitution is coming up next week, so investors have been wondering if the pair might graduate into a large cap Russell 1000. That was decided long ago before the latest upsurge in meme stocks. Although the Russell reconstitution will take place after market close on June 25th, the changes in each index's members were determined based on market caps as of May 7th. So we know that AMC didn't start really climbing until mid to late May, and that the numbers at that time for AMC didn't justify AMC going up into the Russell 1000. If the numbers were determined a couple of weeks later, then yeah, maybe we'd be talking a different story right now, and maybe AMC would be going to the Russell 1000. But based on its market valuation at this time, it didn't justify going up to Russell 1000. In order to move into the Russell 1000 index, an existing Russell 2000 member would need to have had a market cap exceeding $7.3 billion on May 7th. That means GameStop, with its $11.2 billion market cap on the ranking day, qualifies to join the large cap universe. AMC had just $4.3 billion on May 7th. Now here's another article from Seeking Alpha that I came across, and it says that AMC Entertainment has no evidence of a short squeeze. Really? I think we've seen a lot of evidence based on short interest, based on all the naked shorting, allegedly, based on all the dark pool trading and everything that, all the manipulation that we see that hedge funds are trying to pull in order to keep the stock price down. There's evidence here. They just don't want to admit it. This may be the perfect time to sell AMC before this dangerous game of musical chairs stops. Why would this be the perfect time to sell AMC? Let's take a look at the chart, guys. We're seeing a beautiful setup here, a bull pennant setup. We got all-time highs at 77.3. We got an ascending level of support that the stock is literally testing and bouncing off of on its way to test 77.3. Okay, this is a true bullish setup. And if the trend continues, we could see a huge spike in the price in about, let's see, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. So if this trend continues in the next 5 to 7 days, we could see a surge in price, and then we'll be testing all-time highs, and we'll probably be testing close to $100. If we look here, we had a huge spike of over 100%. Look at the size of this candle. It went from $35 to $60. That's massive. That's a 4-hour candle. Okay, and it went up over $30. You're telling me that if we get to 77, we don't have the potential to shoot up another $30 and test that $100 mark? Now, $100 is going to be a huge psychological level, and I think that's going to be a huge point of resistance. So we may blow through it, but then I see some kind of pullback coming down back to the $100 level, unless the short squeeze starts. And then we could see all-time highs blowing past 100, 200, 300. Who knows where that's going to go? But $100 could be the catalyst that triggers the short squeeze. Time will tell. While AMC Entertainment is still an in-play meme stock and heavily supported on Reddit's Wall Street Bets, short sellers appear to dig in as well. After a 2,500% increase in AMC's price, there is no evidence of a short squeeze. This may be a good time to sell AMC and walk away before this dangerous game of musical chairs stops. AMC raised $230.5 million at the beginning of the month by selling 8.5 million shares to hedge fund Mudrick Capital Management at an implied price of $27.12. Mudrick Capital Management quickly flipped its AMC stake to the Reddit army and booked a 20% profit on the trade. Okay, so this is one of the paragraphs that really caught my eye, and it actually made me laugh. I chuckled when I saw this. AMC raised $230.5 million at the beginning of the month by selling 8.5 million shares to hedge fund Mudrick Capital Management at an implied price of $27.12. Mudrick Capital Management quickly flipped its AMC stake to the Reddit army and booked a 20% profit on the day. Yeah, that's true, but what happened after that? Well, let's take a look. Mudrick Capital takes massive hit on AMC shares as short bet backfires. What? Didn't they just make tens of millions of dollars on a long position? You're telling me Mudrick had a short position in AMC as well? A big hedge fund's complicated mix of bets on shares of AMC Entertainment has reportedly backfired, spurring a loss that tanked its value by 10%. Mudrick Capital, which made a tidy profit earlier this month for purchasing $230 million in AMC shares and then selling the entire stake just hours later, saying that the stock was overvalued, took the painful loss because of a series of bets it had also made against the company, according to the Wall Street Journal. Before Mudrick bought into AMC, the fund hedged the purchase with a number of put options, a type of derivative that gave Mudrick a short position in AMC stock. But after Mudrick sold the 8.5 million shares, it failed to exit its short position, according to the journal, which cited unnamed sources. Sounds like karma to me, doesn't it? As AMC shares closed the day 23% higher despite news of Mudrick's sale, the fund's risk committee met and decided they would liquidate the entire short position the next day, according to the journal. But Mudrick didn't close out quickly enough. On June 2nd, impassioned day traders pushed AMC shares 127% higher in a single day, costing the fund hundreds of millions of dollars. Mudrick Capital is still up 12% this year, despite the recent loss. So, another example of hedge funds trying to manipulate the stock. So this is what I think Mudrick's train of thought was. Their executives sat down one day and said, hey, AMC is going to be doing another public offering, and we have an opportunity to get 8.5 million shares. All right? So how can we turn this into our favor and swing it both ways and make money on both ends? Well, hey, let's buy some put options, okay, and bet against the company. We'll take those 8.5 million shares. We'll buy those 8.5 million shares and then dump them. Okay? We'll make a nice profit because we see that the stock is trending upward. We'll make a nice profit and swing it. And then we'll come out with news saying that, hey, we decided to sell because it's overvalued, which should cause the stock to plunge. We're going to cause selling pressure by selling all our stocks and dumping them into the market at once. And then our puts are going to profit nicely. Okay? Not knowing that the next day the stock was going to surge 127%. If you were thinking of getting out of your short position, why wouldn't you get out same day that you sold the stock? I think this is hilarious. Mudrick tried to manipulate AMC's stock price. They were trying to pull some shady crap behind the scenes by buying put options to bet against the stock. They bought those shares. They made a nice profit, and they held on to their puts. They didn't get out of their position. And they wound up turning a $20 million profit into an over $100 million loss. That's a karma. That's karma. And all you hedge funds out there that are still holding on to your short positions and taking on larger short positions, look at what happened with Mudrick, and maybe you should think twice, because this stock is going to explode, in my opinion. So guys, again, I just wanted to share some of the negative news that I'm seeing. You look up any kind of AMC news on Google, you're going to see all these negative headlines come up on the first page. But if you really want to know what's going on, it might not be the best idea to listen to what Main Street media is saying. Okay, because they have ulterior motives, and they want to see this stock do negatively, and they're trying to do everything they can to scare us out of our positions, because they know what's coming. They can see it. And a lot of us have been in this for months. We've seen some nice tendies. We've seen some nice gains over the last several months. Patience is key. Like Warren Buffett says, the stock market is an investment vehicle to transfer wealth from the impatient to the patient. I know a lot of you guys have gotten into this position recently because of FOMO. You guys don't want to miss out on the opportunity. But we're not going to see the squeeze happen from one day to the next. This is a process, and the hedge funds know we're trying to make the stock squeeze, and they're throwing every trick in the book at us to try to prevent the squeeze. So this is going to take time. But the more time it takes, the higher the potential for a massive squeeze. And that massive potential is in our favor. So guys, thank you for watching. I'll see you guys in the next video.